Join me as I dive deep into the world of value investing and challenge myself to turn a small investment into a fortune using these secrets. Achieving financial independence is a dream shared by many, but realized by few. One of the most powerful ways to get there is through value investing. In essence, value investing is about identifying undervalued companies with strong fundamentals that have the potential to increase in value over time. One of the biggest misconceptions about investing is that it's all about making quick profits. People often think that investing is only for the wealthy, or that it's a high-risk, high-reward game. Some believe that investing is too complicated, or that it requires a degree in finance. Others think that investing is only for the short term, that you need to constantly buy and sell stocks to make money. Another misconception is that investing is all about timing the market. People think that if they can just time the market perfectly, they'll make a fortune. But the truth is, no one can consistently time the market. Even the most experienced investors can't predict what the market will do in the short term. Many people also believe that investing is a zero-sum game, that for every winner, there has to be a loser. They think that investing is all about beating the market, or beating other investors. But the truth is, investing is about growing your wealth over time, not about competing with others. And finally, some people think that investing is only for the young. They believe that if they didn't start investing in their 20s, it's too late. But the truth is, it's never too late to start investing. Whether you're 25 or 55, you can still achieve financial independence through value investing. So, how do we identify undervalued stocks? The key is to focus on the fundamentals of a company, not its stock price. We need to look at a company's financial health, its management team, its industry, and its competitive advantage. We need to do our research, read financial reports, and talk to experts in the field. Research is key in value investing. We need to be willing to put in the time and effort to learn about a company, its industry, and its competitors. We need to be willing to dig deep, to analyze data, and to make informed decisions. One of the most important principles of value investing is patience. We can't expect to make a fortune overnight. We need to be willing to hold on to our investments for the long term, even when the market is volatile. We need to be disciplined, to stick to our strategy, and to avoid making impulsive decisions based on emotions. One of the most important principles of value investing is patience. We can't expect to make a fortune overnight. We need to be willing to hold on to our investments for the long term, even when the market is volatile. We need to be disciplined, to stick to our strategy, and to avoid making impulsive decisions based on emotions. One powerful secret that successful value investors use is to focus on the margin of safety. This means buying companies with a high margin of safety, which is the difference between a company's intrinsic value and its market price. The higher the margin of safety, the lower the risk, and the higher the potential for returns. The margin of safety is what sets value investors apart from others. It's what allows them to make consistent profits over time, even in volatile markets. It's what gives them the confidence to hold on to their investments, even when others are panicking. Another secret is to focus on the quality of a company's management team. A good management team can make all the difference in the success of a company. They need to be able to make tough decisions, to navigate through challenging times, and to create value for shareholders. Successful value investors also diversify their portfolios, not just by investing in different stocks, but also by investing in different asset classes, such as real estate, bonds, and commodities. They understand that risk is inherent in investing, and they take steps to manage that risk. In conclusion, value investing is a powerful way to achieve financial independence. By focusing on the fundamentals of a company, by doing our research, and by being patient, we can identify undervalued stocks and hold on to them for the long term. Thanks for watching, and I'd love to hear from you in the comments below. What are your thoughts on value investing? Do you have any questions or tips to share? And if you want to learn more about investing and achieving financial independence, be sure to check out my other videos.